Are you an investor looking for premium market opportunities? Presenting premium and exclusive service for investors by Kalkine.
British banks have been in focus amid the rising interest rates. Inflation is in the double digits and the Bank of England has been raising interest rates to tackle it since December last year. What's more, since the previous Chancellor Kwasi Kwarteng presented his disastrous mini-budget by announcing tax cuts worth tens of billions of pounds, mortgage rates have seen a steep rise. And the rise in interest and mortgage rates has made borrowing expensive, but it's also unlocked a key revenue stream for lenders. Additionally, this growth has impacted the quarterly results of London-listed lenders. Let's take a look at the shares of two financial institutions that have recently posted their results. The first is NatWest Group. The leading FTSE 100 listed lender has released its numbers for the third quarter of this year, and its pre-tax profits were flat. NatWest posted pre-tax earnings of about £1.1 billion, which is slightly less than analyst expectations of £1.2 billion. And when compared with the numbers for the same period last year, these latest figures are largely unchanged. Meanwhile, the group's total income during the July to September period sat at £3.2 billion, which is a 16% increase on a like-for-like basis. And while the rising interest rates benefited revenues, NatWest said it passed on about 25 to 30% of the higher interest rates to savers since the fourth quarter of 2021. The company has made a bigger provision for bad loans in the future due to economic challenges. It also expects to make more money this year as it raised its previous guidance of £12.5 billion to £12.8 billion in total income in 2022. NatWest shares slipped almost 10% during the day on Friday. The next one to keep an eye on is Lloyds Banking Group. Lloyds reported its third quarter numbers on Thursday, indicating how lenders are struggling to increase their profits despite the rising interest and mortgage rates. Halifax's owner, the country's largest mortgage lender, posted pre-tax earnings of £1.5 billion. This is a 26% fall from last year's period. This comes as the lender has put aside £668 million as protection against bad loans and potential defaults on mortgages due to the cost of living crisis. Calling it a forward-looking charge, Lloyds said it will protect against the worsening economic conditions. The company's net income rose 19% to £3.4 billion, but it was offset by what Lloyds called the impairment charge amid the deterioration of the macroeconomic outlook. And despite that bleak outlook, the bank is ready to help borrowers troubled by the soaring prices and high borrowing costs, according to CEO Charlie Nunn. Lloyds shares slipped over 3.5% on Friday. Now that you're up to speed, hit that bell icon and subscribe as well to boost your financial IQ. I'm Holly Shields for Kalkine Media.